Hello everyone and welcome back to the channel. My name is Brent, and in today's video we are going to go ahead and cover the M1 Finance portfolio. We're going to go ahead and take a look at the overall performance of our portfolio so far. We're going to go ahead and take a look at the 1 week performance. What were the top 3 winners, the top 3 losers? Do a comparison between our performance of the portfolio between the 4 main indexes. Then we're going to go ahead and hop over into the activity, going over the past buys, the sells, the dividends. We're going to go ahead and take a look at what the portfolio's current dividend income is. And then we're going to go ahead and make the decision as what stocks we're planning on buying this Monday. So with that said, if you guys are brand new here to the channel, definitely go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video. And of course, give this video a thumbs up, make it blue, and let's go ahead and get into the video. So jumping over into M1 Finance, I see that once I logged in here, we have some dividend activity. This is an alert that popped up. So it says, you asked, we listen. You can now view a detailed breakdown of your earned dividend activity from the portfolio tab. So our portfolio tab, try it out today and gain more insight into your investments. So somewhere inside of our portfolio tab, which is the default tab, we're able to now view detailed breakdown of your earned dividend activity. So we're going to go ahead and check out that really quick update here and see if I can kind of notice off the bat what they mean by they've added something here into the portfolio tab. Oh, we can see right here. We can click on view, and this shows our earned dividends. Our total earned dividends here is $2,502.73, and we can see the breakdown of how much in dividends each company within our portfolio has paid us over the time that we've held them in our portfolio. So this is really cool right here. So I can actually go through and I can see that WP Carey has paid me a whopping $129.06 in dividends, followed right behind by AbbVie at 119, Main Street Capital, Pfizer, Kimberly-Clark, and so on. So this is a really interesting chart right here that M1 Finance has recently added in, and this would be pretty cool. I'm sure, yeah, this would be a pretty cool little tool to use here going forward. Hormone Foods was one of the newer additions to the portfolio, along with Colgate, and it looks like the majority here from IIPR down are positions that were recently added to the portfolio. Merck was recently added, but we bumped that one. That was a position that we got bumped up to like what, $2,000 pretty quickly. So it's beginning to move pretty quick in the portfolio, and it has nearly a 4% starting yield. So that is really cool here. We can hit escape here and exit back out. So this is a really nice addition that M1 Finance has recently added into the portfolio overall. Okay, now let's go ahead and kick it off by taking a look at number one. What is the overall performance of the portfolio? We're up 66.8%. So we have pulled back slightly off those highs. We can see here that the high of the portfolio was sitting at roughly 38,000 and some change right there. So 38,367 looks to be the high of the portfolio. So we're not too far off from the high. We have pulled back here slightly during the last month or so. If we take a look at the 1 month here, we can see, yeah, we had a high right here of 38,367. And that was about a few weeks ago when I put out my video that we kind of hit that high. And we've been pulling back quite a bit. Last week, we had a bit of a double bottom right here. We can kind of see within the portfolio. And we had a higher double bottom. And we're showing some signs of maybe some move to the upside. I think we moved above the 50. As far as looking at the S&P 500, if you were to look at that, we did fall below the 50-day moving average, which kind of showed signs of weakness. But during the last few trading days, the S&P 500 had recovered and actually broke above the 50-day. So right now we're kind of in muddy waters where the market could continue to break down, fall back underneath. We'd lose a little bit of steam and the market could pull back a little bit sharper, harder, but that's still to be seen and we don't really know what will happen. But overall, let's go ahead and take a look here. Our top 3 winners are continuing to be Apple, Lowe's, Main Street, and Avery Dennison here. I think ABM Industry had actually fallen behind and Avery was These ones kind of switch places every once in a while. So Avery looks to be number 4 right now. ABM is number 5. Our top 3 losers, Clorox, we have Hormone Foods, Colgate, and Merck. And these are all positions that I recently added to the portfolio, so I'm not worried about them at all. They're kind of in their own little world right now, kind of getting beat up here in the short term, and that's why I kind of added them into the portfolio. This isn't really down 38% because 38% of $2,000 would be more closer to about $600 loss. So I think the math here on this one is a little bit funky, and I'm just not paying too much attention to it. But those are our top 3 winners and losers overall. Now, let's go ahead and jump over into the 1 week performance. So 1 week wise, we're up 50.52%. We can see that this is mostly all market gain. So we made $192.77 of market recovery during this past week. Here, we can go and compare that to the S&P 500, which made a recovery of 0.51%. So here we are. We're staying in line with the S&P 500 this week. The Dow Jones put on a 0.62% recovery. The Nasdaq essentially flat at 0.02, and the Russell 2000 is up 0.5%. So 0.5% there for the Russell 2000. So if we put these in order here, number 1, we have the S&P 500 up 18.62% year to date. Followed right behind by the Nasdaq at 16.75% year to date. In third place, we have the Russell 2000 at 13.83%. And we have in last place, but following right behind the Russell 2000, the Dow Jones at 13.69%. So really, if the Dow Jones puts on a pretty good gain and the Russell 2000 breaks down a little bit, we may see Dow Jones and Russell kind of flip-flop here and there. But overall, it's a pretty good week in the market here. If we take a look at the overall performance here of the 1 week here, we can see that across the board we had some pretty good recovery areas. We can see really quickly that energy had a really nice boost. Exxon up 4.41, Chevron up 3.97. We had a mixture in the FANG stocks, so some positive, some negative. We see Amazon, Facebook, Adobe, and such were negative, whereas Tesla, Google, Apple, Nvidia, and Netflix were positive. So a little bit of a mixture there with the tech. And also in financials, I think financials had been kind of beaten in the past few weeks, but we can see some really nice recovery here with JP Morgan up 3.4%, Bank of America up 4.05%, Wells Fargo up 3.12%, Schwab right there up 7.33%, and across the board we have a few other positions here in the more the regional and data and stock exchanges positions here, so pretty positive. We also see travel stocks. So check out over here. I know that sector right there was very bright green, so looks like travel services are beginning to pop. They may have hit a little bit of a bottom there. Looks like all of the graphs there kind of show sort of the same trend lines. It kind of hit some support. NCLH, I can kind of see that on that one. It hit that support line 3 times and then started to move up recovery wise. But we can see some really nice movement there with all of them. Expedia, I think, is EXPE. So that's pretty interesting. But no other really sectors stand out besides financials, travel, and energy. Looks like aerospace also has a little bit of positive green there, but everything else is pretty mixed. Okay, so jumping over into the M1 Finance portfolio once again, we can see that our best performers this past week were Cisco Corp, Innovative Industrial Properties, JP Morgan, Merck. So we had some pretty good movement here. We had a food distributor, we had a real estate investment trust, we had financials, and we had some healthcare. Like one of the few healthcare here that were kind of positive was Merck, kind of popping off those lows. They've been beat up pretty heavy here recently, and that's why we started adding them. And then our worst performers down here, not so bad. We have Hormone Foods down 2.9%, Digital Realty Trust down 2.6%, Cardinal Health down 2.43%, WP Carry down 1.93%, Realty Income and such. I would really like to see these kind of lose a little bit of steam. I'd like to buy a little bit more Realty Income. I really don't have that much in comparison to where I really should have had it. You know, in the beginning, that should have been a really good one. I should have boosted up nicely. WP Carry as well. WP Carries made me over $100 in dividends during the time frame with only $1,000 invested in it. So it's also really had really good performance over the history of the hold. Okay, so we have covered the overall performance. We've done the 1 week performance in comparison to the main indexes. So we essentially fell right in line. So number 3, let's go ahead and take a look at the activity overall for this past week. So on Monday, we had 2 buys. We had Pfizer and Cardinal Health. So what I want to do here really quickly, since we have our buys up, I want to go ahead and update my tracker, my dividend tracker with you guys. Inside of M1 Finance's portfolio right here, I'm going to go ahead and look up Pfizer, because every week I kind of go in here, edit, and update these positions. So I need to update Pfizer and Cardinal Health. So Pfizer and Cardinal Health here. So we own 30.06 shares. 30.06 shares. And our cost basis is now 36.37. 36.37. So we did increase our cost per share there by averaging up in Pfizer, but we did sell it off at near highs, and we just rebought it a little bit lower when it had pulled back. And then we had Cardinal Health, CAH, 21.05. So we go and take a look here at 21.05, and we own 40. The average price there is 49.61. So 49.61, I believe. 49.61. That's correct. Update that holding, and now we should have our portfolio should almost inline match. So 37.483, 37.482. That's pretty much in line. Here, there, you know, it doesn't have all the fractional shares down to the 10,000ths of a fraction. So the numbers are going to be slightly off. But we've increased our annual income. I didn't take a look at what it was at before. I'm sure during the recording I had a previous shot there, and then now the updated shot. So I'll have to take a look at the difference there. But that's something I should have actually looked at there. How much did we increase over this past week? But I'll go ahead and have a little comment at the bottom of the increase there. I'll add that there as a little snippet. So our portfolio is updated. Let's go back to the activity. So we made those 2 buys. We got Pfizer and Cardinal Health. And then we had 2 companies pay out dividends. We had Stanley Black & Decker pay out $3.86. And we had Lockheed Martin pay out $14.71. Plus we deposited that $201.42 for a grand total to invest today of $219.99. So that is pretty good. As far as what we're planning on buying, I didn't go into this video with a plan of what I was wanting to buy. Merck. So I don't want to add any more into Merck at the moment. I believe Hormone Foods, it continues to go further and further down. It's been getting beat up here quite a bit here in the short term. So I'll have to take a look at that one. Let me go ahead and pull up the charts on that one. Bring it over here. And we're going to go ahead and take a look at Hormone Foods, the price, the 50-day, 200-day moving average, and the 1 year. And we'll go ahead and remove some of these extra things that's added in here. And we will go ahead and take a look at where this one is at here right now. Okay, so we can see a huge breakdown here for Hormone Foods. It's really sort of been continuously moving down. There's really no uptrend at all. It had, you know, it's tried to recover a few times going back 6 months out. But every time it tries to make some sort of recovery, it's going down as a higher low. It's a lower high, right? Lower and then a high. It's a lower high. So yeah, it tries to come up, but it doesn't quite break, and then it falls apart and breaks down. Then it tries to go higher, and then it breaks down. So it's not showing any sort of recovery right there. I'm going to go ahead and just bring in its revenue, net income, free cash flow. I'm going to go ahead and look at its earnings here over the past 3 years here. And we can see here revenue, that's been pretty consistent. But what's kind of dragging this down? Okay, so we have its net income kind of being negative here. It's been trending lower and lower over the past 3 years. Let's look at the 5 years. So we can see here by looking at the breakdown, its earnings per share generally follows with the net income, but it began to accelerate right here in 2020. We see that net income had been descending pretty normal, right? But then we see earnings per share right here just kind of drop off a cliff and continue to drop faster and faster. So it's a little bit elevated as far as drop with the earnings per share. And then we see the decrease in free cash flow. So Hormone Foods right now, I'm going to go ahead and let that one sit. So I think that was what I had planned in the past. Not buying into that one anymore at this moment. So I'm going to go ahead and skip over Hormone Foods. Let's go ahead and take a look at Colgate. So let's go ahead and bring in Colgate really quickly. That one's kind of negative in the portfolio. So Colgate here, it does have rising earnings per share over the last 5 years, as rising net income. Its free cash flow, not a big driving factor there. Let's go ahead and take a look at its revenue. So overall, it's looking pretty positive. Its net income's going up, its revenue's going up, its earnings per share has been slowly going up here. You can see a nice move to the upside. We can see its price though. Price has dropped pretty rapidly from a high of 84. So we're seeing some support here in the $76 range. And our position, we started up, we're down 7.76%. So we must have bought it here in this area and thinking that it had some upside. I mean, we did buy it not too long ago. We did capture some gains right there, but it quickly pulled back. And it could break down back into the 60s again, but it's not too bad. I mean, it has rising revenue, net income, and earnings per share, and it doesn't look to be breaking down at the moment. Let's see what we can take a look at here. Price to book, price to sales. This is more of a sales-driven company, so I'm going to go ahead and just leave it at sales. So price to sales here is at a 3.8. And its PE, forward PE has been dropping. It's at a 23.75. If we look at the general PE, we can see that this stays pretty consistent. Over the past 5 years, this company has generally traded with a PE of over 24. So, given time, it doesn't actually look that expensive right now. Its price in comparison to its earnings seems to be on the low side over the last 10 years, besides back here in 2012, 2013. So overall, doesn't look too bad there. Let's go ahead and look at its price, 50-day, 200-day moving average. Look at the last, look at six months here. So we had a golden cross here, 50-day moving over the 200-day. What do I have here that's popping in extra? Okay. So golden cross, 50-day, crossed over the 200-day, showed signs of life. Price shot a little bit to the upside, but then we had a bit of a breakdown right here. 50-day cross under the 200-day, death cross. Stock price broke down. We hit a bit of what looks like maybe some support here in that 76. So here back in March, April timeframe, $76, $70 was sort of support. So this is acting as support right now. I don't see any sort of bad negative stuff with their earnings as far as revenue, net income, free cash flow. And when I looked into Colgate, their past earnings, and let's go ahead and look at their latest earnings per share. So, okay, we're looking at their last earnings per share. We can see they had reported earnings, 80 cents per share. That was the estimate. The earnings estimate was 0.78. They beat their earnings whisper estimate by 2.6%. Their revenue came actually higher by 0.5%. They had year-over-year revenue growth of 9.3%. So even during the pandemic, they had revenue growth from the last year going into this year. So everything was showing pretty positive. So kind of just looking at this, Colgate reported second quarter June 2021 earnings of 80 cents per share on 4.3 billion. They had the estimate of 0.8, so they came in line with their earnings per share. And their revenue of 4.2, so they came in with 4.3, so they beat out their estimates. And company said it now expects 2021 earnings to be lower end of the previous guidance range of 318 to 334 per share, and continues to expect revenues. So yeah, they're still in line as far as what they expect, but you know, they're still showing growth and their share price has kind of been dipping. So they're still in line as far as their projected estimated earnings. So I think there's no sort of negative there with Colgate. So I'm going to go ahead and just buy Colgate to bump up that position while it is down by 7.76% in the portfolio. So all I'm going to do here is select Colgate. And I'm going to go ahead and take my full amount here and go into the buy. And we're going to go ahead and buy up $219.99 of Colgate. Confirm that and done. Okay. So that is it. We've gone through all of our things. We've gone over the overall performance of the portfolio, the 1 week performance in comparison to the main indexes, the activity over the past week, the dividends that were paid out. We also updated our dividend income chart. So this portfolio is now making $1,064 over a 1 year period. And we went ahead and purchased some more Colgate, averaging down on our position, which will lower down our cost basis, increase our yield on cost, and increase our overall future dividend income. And not only Colgate, but in our portfolio overall. So with Colgate here, ticker symbol CL, it is a current around 2.32 starting yield and has had dividend growth for the past 58 years. So, you know, based off their financials and their current history of raising and paying out dividends, I don't see any negative, you know, thing happening with their dividend itself or the company overall. So little blip with them right now, but overall, I believe that they'll move to the upside once again in the future and continue moving higher, driving our portfolio, you know, higher along with it. So that is going to be it for this video. Let me know down in the comment section below if you guys have any comments or questions. If you guys haven't yet subscribed here to the channel, definitely go down below, hit the red button to subscribe, make it great, hit the bell to be notified every time we release a brand new video. And of course, if you guys have any comments or questions or have any suggestions for upcoming videos, let me know down in the comment section below. Otherwise, that is going to be it for this video. Thank you all for tuning in. I will see you guys next time. Have a great day. Bye-bye.